Good morning, listeners, and welcome to the Trade Talk podcast. Most Asian stocks are trading in the green following gains in the US markets after the PPI report added to perceptions the Fed may be approaching its rate hike peak. The dollar index, which was trading around 100.50, is now trading below the mark of 99.50, which is something really positive on which we discussed on Thursday. Also, if we go through with the 10-year bond yield, then it is around 3.76, which is consistently falling from the highs of 4.05. And yes, on the other side, if we see the market, then the crude price, which was around some $76 is now trading above the mark of 81. So we are of the view that if the crude is going up, it is good, because then it shows that again there is like something where we can say it's a demand driven rally. But at the same time, the overall news flow is suggesting us that there is some like shortage on the supply side. So that we will come to know in the near future. But broadly, we are of the view that the markets are in the range. They are forming some zigzag pattern, and because of that, this particular contrast strategy of going long and short at the important level, actually that works better instead of taking breakout buy. So yesterday also we saw good amount of rally after opening higher. The market broke the level of 19,530, but after hitting the levels of 19,570, it quickly came back. In fact, it has broken the level of 19,400. So it shows that there is a profit booking which is going on above or around 19,500. So there we need to be careful. So today, in case if we see any higher opening, then close to 19,500, we need to be careful. And if we see any reversal formation, then we should look for taking some contra bets of going short on the market with a stop loss at 19,570. But yes, in case if it breaks 19,570, then we need to exit out of short positions. That's the condition. And if it falls to, let's say, 19,400 or 350, then again there we may see some buying interest in the market. But below 19,350, we can expect some weakness in the near term. So 19,350 is the lower boundary, 19,570 is the upper boundary for the market. For the Bank Nifty, there also we feel that 44,500 is going to act as major support. 45,000 is the ultimate resistance, and till the Bank Nifty is not closing above 45,000, I think we are going to see range bound sort of activity. Yesterday, after a very long time, we saw some buying interest in private banks. PSU banks were down, but again, if they are falling to their important support areas, then we should be buyer in them, as there is very strong pattern of volume and price breakout. Finally, for the Nifty IT Index, we saw good amount of buying attraction after the numbers of HCL Technologies, TCS, all the IT companies recovered from their lower levels. So again, we would say that there was like a huge amount of shorting happened in the past few days, few weeks before the announcement of the numbers, and maybe after the numbers there was hardly any follow-up selling, which has actually lifted the stocks. So based on the technical formation, we are of the view that 28,300 is going to act as major support for the Nifty IT Index, and 29,600 was the resistance. Yesterday we saw 30,000 sort of levels. So today, for the day, the now range has shifted to 30,000. Above 30,000 only we can expect some fresh buying interest in the IT companies. Apart from this, metal stocks need to be on the close watch. Yesterday, Jindal Steel and Power, JSW Steel, they did well. They recovered from their lower levels, and we are of the view that metals should do well, along with a few capital goods companies. So broadly, we need to be careful around important levels, and we need to be more and more stock specific. That's all from my side. With this, I am ending today's call. Thank you.